Hi, everyone. Welcome to Wellness Wednesdays. Thanks for joining us on our second Wellness Wednesday of the month. All throughout April, the Office of Student Engagement is featuring different areas from the Gallup 5 Essential Elements of Wellbeing. These include career well-being, social, physical, community, and financial well-being, which we'll be diving into during our time together today. I'm Cait Burns, the Director of Office of Student Engagement at the VCU School of Business. Today, we welcome Carolyn McCrea, the Director of Financial Wellness at the Virginia Credit Union Financial Success Center. She'll be starting us out with an overview of best practices for money management, and then we'll turn to live Q&A. As questions come to you, please type them in the chat, and feel free to send your questions to me privately as well, and I'll field them when the time comes. So thank you, Carolyn. Let's get rolling. I'll turn it over to you.
Great. Thank you so much. I'm seeing some familiar faces in there. I'm so excited to be here. Can everybody hear me okay? Thumbs up is great. Okay, perfect. Wonderful. So yes, as Cait said, we're going to talk a little bit about financial wellness. I have a couple things that I wanted to dive into, but really want to leave most of the time today for Q&A. So if there are burning questions that you have about managing finances and being financially well, particularly at this time of uncertainty, if we can put it that way, I'm happy to answer those for you. So I have built this to kind of reflect what we're seeing with the changes in our economy and that we're moving into a recession. And so I built this to reflect 4 things that, as part of the Virginia Credit Union Financial Success Center at VCU, things that we're recommending that you look at to be financially well for now as we're going into this recession, but these are also good practices to have during any time. So wanted to kind of start with these, and then as questions come to you, again, happy to answer those for you. So our financial wellness basics, we have some folks from the credit union on here too, and we always talk about cash flow, and that really cash flow comes down to 2 primary things: increasing your income or reducing your expenses to lead to a more positive cash flow. And both of these things can help us to kind of plan for the future as we think about our day-to-day cash flow management. We like to use the term cash flow as opposed to budgeting because budget has this negative connotation, kind of like diet. You don't want to be told what you can't spend. You don't want to be told what you can't eat. So instead, we talk about cash flow as a little bit more fluid. It allows us to figure out ways where we can be bringing in more money or spending less money, and identifying things that are really the priorities that you want to be using your money for. So thinking about where we are right now, we hear these reports about stock market changing, being really volatile, dropping a lot. For those of us who have retirement funds, we look at those and we see that their value has gone down quite a bit. So we are going into this recession. We're going into a bear market, which is another term for it. And so we identified 4 steps to think about as we're going into this recession because of the coronavirus climate and basically the economy not being able to be as robust because we're not out and about and spending. So these are the 4 steps that we're going to talk about today. The first is one of the simplest ones to help improve cash flow and kind of prepare for leaner times, and that's cutting back on expenses. One formula that I particularly like, although there are plenty out there that you can find in a Google search, but I really like the balanced money formula, looking at that spending 50% of your income on needs, 30% on wants, and 20% on savings. I like to use this one. It's the one that I use for my household. And when we're thinking about expenses, being able to track kind of what you're spending, seeing if they're kind of lining up with those percentages based on the money that is coming in, or maybe there's been a cut to your income, and thinking about ways that you can slim down some of those places. So needs, wants, can you redistribute into savings? And we'll talk a little bit about what emergency savings ideally would look like and how we can kind of get it there to prepare us for other times where the economy starts going down. We know it'll come back up eventually, it'll go back down eventually, and we want to make sure that we're preparing for the future. So for increasing savings, we hear a lot about emergency savings and building an emergency savings account and stockpile and having some cash that's readily available for you in the event of like a layoff or an emergency expense, like you need to have access to your car and it breaks down. For a lot of us, half of adults in the US don't have $500 saved in case of emergency. So at the Financial Success Center, what we recommend first is starting with your $500 and then building from there. And building it towards a place where you can get 3 months of expenses to 6 months of expenses. Initially, we had said 3 months of expenses, and then the 2008 recession hit and they increased that because people were out of work for a lot longer than that traditional 3 months that had been best practices. And now we're hearing, well, there's a lot of concern about how long we're going to be impacted by, layoffs and furloughs, and when is the economy going to get back on track. And, we've heard scary numbers like 2026 or 2022. And so thinking about how can you really build out the savings to prepare for the long haul for this particular situation, and then when this happens again, not with the coronavirus, but with any other kind of economic downturn, because again, it's gonna happen at some point. So for a lot of folks saying, oh, 3 months of expenses, like that's a lot, and that is a long-term goal. So again, we say start with something simple like 500 and build from there, and give yourself a pat on the back every time you reach one of these little milestones of 500 or 750 or 1,000. And we've got students, and I know we've got professionals on the call today, so this will vary depending on kind of where you are and what you can actually put away based on if you're working, if you're a student, if you're furloughed, if you're laid off, all of those, and we can certainly answer questions specific to your unique situation. Okay, another place where we recommend kind of looking at being financially well during a recession is looking at how can you pay down debt, identifying good versus bad debt, and any bad debt, making that a priority, and then identifying if you want to use an avalanche or a snowball method, and I'll talk a little bit about what those pieces are. So good versus bad debt, some of you may think that all debt is bad and you don't want to be in the hole, and that's totally fine. We typically say that for good debt, it's something like a student loan or a mortgage, things that you are current on, that you're paying the required balance every month, that you're keeping your account current, you're not delinquent, you're not late with payments. Those can actually help your entire credit report, credit worthiness, and credit score. The bad debt would be typically anything with a higher interest rate. So I usually use, if the interest rate is above 10%, we don't love that, and we want to make that a priority for paying that down so that your money isn't going towards just interest payments. Credit cards are a good example. If you are using them to spend money you don't have, or you're not current with your payments, that can be an example of bad debt because those interest rates can be scary high, in the 20% range. So we take a look at what kind of debt we've got, and then we prioritize based on what your particular goals are. So there's two methods here on the screen for paying down that debt piece, and that's the avalanche, which is you're actually focusing on the amounts that have the higher interest rate and typically higher amounts, and you focus on those and make those a priority. Once those are paid down and you've paid off that particular debt, you use what you were paying and you put it into the next debt, and you go so on and so forth. So your debt picture eventually kind of looks like this, looks like an avalanche. Snowball is where you would take the debt that you have the lowest balance on and you pay that first. And some people really like that because they feel a sense of accomplishment of, it's only a $500 debt, and yes, I've got another one that's $1,000, but I'll pay that $500 off first, and now I only have 2 debts that I'm looking at trying to pay down, or I'm cutting it down by the number of debts that I actually still have outstanding. So whichever one is going to keep you motivated, that's the way to pay down debt that you should be using. And then for a fourth one, focusing on the future. For those of you with retirement accounts, knowing what your portfolio is and making sure it's diversified is great, but we definitely recommend don't stare at it. Don't go in it every day right now. It can be a little bit sad. I stopped looking at mine when it, dropped several $1,000s in a day, and I went, okay, yep, it's diversified. I know it's in good shape to be able to rebound. If you're not retiring in the next 5 years, you can kind of make sure that it's diversified and is setting up you for the risk that you want to assume. But otherwise, just kind of leave it for right now. If you have the opportunity to, stock prices and everything are really down right now. So if you've got the option, you've got your emergency savings set, you've got your debt plan to pay down any debts that you have outstanding set, you can look at increasing contributions too, to help for future you, help for your retirement. For those of you who are still in school, this focusing on the future means continuing your education, continuing your training. For those of you graduating, it doesn't necessarily mean go right to grad school, because typically with additional education comes additional student loans and things like that. But making sure that you're continuing and you're getting the degree that you're already set up to get in the next couple of years, because that helps to recession-proof your job and your future a little bit more. Overall, we typically find that individuals with more advanced degrees don't experience the same amounts of layoffs or furloughs or things like that. It changes from recession to recession, but continuing in that education and investing in yourself is a great way to plan for the future. And so with that, I will stop talking. This is how you can get in touch with us. We do offer individual appointments for VCU alumni and current VCU students in peer-to-peer financial education, but I would love to answer any questions that you all have. And I will stop sharing this so that we can have a conversation.
Thanks so much, Carolyn. So we do have one that came through related to emergency savings and getting that started.
Yeah.
So how would you recommend starting an emergency savings, and especially right now when money is tight?
Yes. So for starting the emergency savings, what I recommend and what we typically recommend to the folks that we're meeting with is creating a savings account that you can access, but you can't access it necessarily too easily. If you needed to make a transfer into your checking account because you hit a snag, you could do that. But it wouldn't be something where it's really easy for you to, oh, you know what, I need a little bit extra because I want to buy some clothes, or there's an audiobook that I want to get, or something along those lines. I didn't budget for it for this month, so I'll just pull from my emergency savings. So creating a little place where there's a bit of a hurdle getting to that emergency fund. We also recommend naming it, naming the savings account based on what you're savings for. So something along the lines of emergency savings, because that kind of creates a mental block for you too of, oh, nope, I can't pull from that in a year or two to go on the vacation that I really want to go to as a treat to myself. This is for something bad happens and I really need access to this money. Layoff, breakdown, home repair, you name it. And then when we're thinking about this recession and we're thinking about how income might be changing right now, it might be getting cut, your hours might be reduced, your employer might be doing a percentage of salary reduction, there might be furloughs or layoffs at your company. It's going back to that cash flow, identifying where are there expenses that you can be cutting. A lot of people are not eating out as much, they're doing most of their groceries and making meals at home. You're not really like going out to the movies or concerts or things like that right now. So identifying places where you can cut what you would normally spend and put that into savings right now. And you can start slow. You can start with a lower percentage and try it for a month and see how that works. Maybe it's you're putting 5% away of what you're bringing in. And then eventually you're kind of ramping up to where you're putting away that ideally 20%, which would be wonderful. But that's not necessarily an option for everybody right now.
Great, and thanks. Naming the accounts makes a lot of sense because it gives it some sort of identity, and we can relate to. It's not just account XYZ; it's emergency savings, just as you were saying. So
yeah, I have an emergency savings account. I have a vacation savings account. I have one for like home stuff. If the dishwasher breaks like it did 3 days after Christmas this year for me, I have that. That's not a layoff, but I need a dishwasher, right? I'm not going to hand wash my dishes because I refuse to do it. So having that dishwasher available and having that little fund set aside really helped us out with that.
Great, thanks. So we have a question from Giovanni here, who is graduating this spring, and it relates to cash flow in the midst of an offer not being rescinded, but being pushed back, a start date being pushed back. Do you have any advice to add on to that for graduating seniors or folks who may be facing a rescinded offer or pushback start date?
Yeah, and that's, it's really tough. And that is the reality of the situation right now is we do have college graduates whose offers are getting rescinded, start dates are getting pushed back, jobs that they had found that they wanted to apply for are being taken off of servers and they're just not available for application right now. There's a lot of hiring freezes that are happening. So I graduated as the 2008 recession was starting. And so there are a couple things that you can do if you've got an offer that's been rescinded or revoked, or they've pushed back the start date. Identify places where you can save in some costs right now. If you've got your housing and things like that already set up, reach out to your landlord and see if you can push back the start date for that new apartment that you're going to be moving into. Can you stay with family for a little bit of time? Do you have, friends nearby that you might be able to go into a roommate situation when you are thinking about kind of living solo as in your first adult job? Are there things that you can do to bring in some kind of income over the next couple of months that you feel comfortable with? Are there online jobs or something like that that you can maybe do, or is there a part-time job that you might be able to continue even after graduation that you've been doing through VCU or in the Richmond community that might help out and just kind of tide you through until August or September when they're hoping to have you start. If offers are being kind of pushed back, and there's no reason to not still apply for other jobs too, because it's not necessarily a guarantee, right? If you're looking at Virginia is a right to work state, so offers can be rescinded at any time. You don't necessarily have to go and take that job. Are there other jobs that you should be looking for right now? And it might mean something along the lines of, looking for things that might be a little bit more entry level than what you were ideally looking for, but that might have an opportunity for advancement as we look to the next couple of years. At the end of the day, we want income. And one thing that I recommend is being picky about fewer things in your job search. So if it's a location that you really want to work in or an industry that you really want to work in, being picky about those pieces, and then being a little bit more broad in your search for everything else.
Okay, thanks. That's helpful.
Yeah.
So switching gears, you talked a bit about retirement, and there's a question here related to 401k. So as everyone is experiencing, this person has lost a lot of money from their 401k due to the state of the economy. They believe the recommendation is to leave money in place in your 401k or 403b rather than removing it. But they just wanted to confirm that this is the best thing to do.
I think it's Warren Buffett who says the way to be successful with things like retirement accounts, which are typically invested in stocks and bonds and real estate and things like that, is to be cautious when people are moving forward, and to move forward when other people are being cautious and scared. So yeah, we're in a bear market, and if you've got the capacity, it can make sense for you to increase investments, because basically the price of what you're investing in right now, which would be for future you could be getting a bargain with those. There's decent risk and reward, right? You've got to be, if you're feeling a little bit nervous, it's okay to go ahead and move things into investment options that don't follow the market volatility quite so much. If you're not retiring in the next 5 years, then it's okay for everything to kind of dip right now, because it will come back. It's what we saw in 2008. Up until the past couple of months, we had this, wild roller coaster ride of everything really soaring in value. And you can even look at companies and stocks that were actually created in the last recession, and how they've really grown and thrived over the past 10 years. So there's always going to be some risk with investing, and that's what a retirement account typically is. Without looking at an individual's unique situation, I would say just make sure you're diversified, make sure you're open to the risk tolerance that you're comfortable with. Keep things in there, and if you can, invest more at this point, because again, your individual stock prices are lower right now. You could do that.
Okay, thanks.
Yeah.
We have quite a few questions flowing in.
Great.
So if you could give a brief answer, and maybe we can expand as we go on.
Yep.
So one is, it seems important to keep cash flow liquid right now instead of considering CDs. Do you know what high yield savings accounts are available out there?
Oh, the best place that I can say to go look at high yield savings accounts, my favorite site is called NerdWallet. And there are quite a few sites out there, but they do comparisons of credit cards, savings accounts, and they will have a quick snapshot of, here are some high yield savings accounts that you can look at right now, with minimum balances, fees, things like that. I would say whichever one you pick, go for one that doesn't have a fee associated with it. You don't need to be paying people to basically be keeping your money for you.
Okay, thanks.
Mm-hmm.
All right, so speaking of spending, should we shift our spending from debit cards to credit cards with cashback rewards?
No. And here's why. The average rewards per month are $25. The average, for Americans, the average increased spending per month when using a credit card is $75. So you end up -50 on the month. Now that's the average. Credit cards can be kind of scary because you could end up spending a lot more than what you have. And that is the case for a lot of us. Credit card debt is really, really high in the US. So using a credit card and using it responsibly, that's absolutely fine, but credit cards can cause some challenges. So you have to make sure that if you are using a credit card, you are using it the exact same way that you would be using your debit card before you go to spending all of your money that way.
Okay, thanks.
Mm-hmm.
So we have two related to, as a VCU student who isn't graduating in May, say I'm concerned about paying my tuition in the fall. Yep. And I would like to know what I can do now. Should I apply for scholarships, emergency funding, fill out FAFSA? If I haven't filled out FAFSA, is there anyone that can help me? And then kind of part two from someone else that's related. If I want to pay off my student loans by the end of college, is there a good method of saving for such high balances like this?
Mm-hmm. Okay. So the FAFSA part, the FAFSA is still available, so go ahead and fill that out now. That is how you would qualify for things like grants, some scholarships, federal work study, things along that line. In the future, VCU, if you're staying with VCU, the priority deadline for FAFSA is March 1, but it does stay open all through the summer. I would say go ahead and do that today. That's going to be step one, because that's going to help you qualify for loans, scholarships, grants, things like that. Not all scholarships, but some have a FAFSA piece to it. The second part, if you have received your loan, your offer letter basically from VCU, which would have the federal loans that are available to you, calculate out what you really need to be spending next year. VCU has got a calculator on its website. You can search for that. It's a VCU tuition calculator. And figure out what you actually need, and don't take out loans more than what you actually need for school. If you can be working, if you can take online classes this summer, you know, our fees were just cut for online classes this summer, so that might help you with saving some money, because VCU is a pay by credit institution. So that is another thing that you can look at. You'd be saving money not on the tuition, but on the fee part. And then we do have some emergency assistance pieces in place for VCU students specifically who have been affected by the COVID-19 outbreak. And Cait, I can give you the links to those, and we can email that out to everybody after this. If you have loans and you're wanting to pay them off before you graduate, that's awesome. That comes down to a cash flow situation. And if you're trying to pay them off before you graduate, I guess my question for you would be, why are you taking out loans and paying an interest rate, as opposed to maybe looking at VCU has got payment plans and things like that too that you could use instead. So that would be a conversation to have with student accounting and the financial aid office, or the new student financial management center is what I would recommend there if you're trying to pay them off before you graduate.
Great, thanks. So we have time for probably one more question. In the meantime, do you want to run the poll?
Oh yeah, I forgot about that.
Yeah, so let's see. Here we go. So can I see a thumbs up if you can see poll in progress? Does anyone see that? No? Okay. We had this trouble when we tested. Hold on. Relaunch. Let's see.
There it is.
Great.
So you should see 3 questions on here too. And this is just as we're looking at the additional resources that the Virginia Credit Union Financial Success Center is going to be offering over the next few weeks and months as we continue to deal with the fallout from this epidemic. We want to make sure that we're offering things that are going to be helpful to you. So I'm going to fill it out too, because why not? But that'll be really helpful to us for sure. So thank you for taking the time to answer those 3 questions. That's fantastic.
Great. So, and as you continue as your answers come in, thanks for, again, like Carolyn said, answering those questions. We are up on our time. This time flew by so fast. Thanks for providing us great information and just a lot to think about as we manage our own money and really think about our financial situation right now and in the future. So we will be sharing this recording with you, which will include the slides. So it'll be sent to you and you can go back and watch it if you missed anything. We also have more Wellness Wednesdays and Mentor Mondays coming up through the month of April. So you'll see in the follow-up note that you'll get, the calendar is attached there, including the sign-up link. So if you enjoyed today with Carolyn, please come back and check out who else we have. If you have any questions, feel free to ask them in the chat and I'll pass them along to Carolyn. And I think that's about it we have for today. So Carolyn, thanks so much again. And I hope everyone has a great Wednesday and a great rest of your week.
Cait, can I plug one thing?
Mm-hmm.
For those of you who didn't have questions answered today, we do have peer coaching, virtual peer coaching one-on-one available. And we have it for VCU alumni, but really anybody who's involved with VCU who isn't a student, and for current VCU students. And if you go to our website, which is finsuccess.vcu.edu, Fin is short for financial, you can register for an appointment with one of our peer coaches or with me through there.
All right, great. And we had one person ask to see the results of the poll. So I did share those poll results if you want to take a glance and see what folks said anonymously.
Great.
All right.
Cait and Carolyn, do you have time for one more comment?
I think
I
so.
One of my new favorite statistics that I quote, there's a survey performed by the American Council of Life Insurers, and they were trying to determine what percentage of households are on track to meet their financial needs. They found that 25%, or 1 in 4, of the most financially secure households earn $50,000 or less annually. So it isn't always about, oh, I need more income.
Mm-hmm.
It is about financial literacy, making wise choices, and managing your finances. So I actually thought that was really interesting.
Absolutely. Yeah. Thank you, Dan, for sharing that.
Yep.
So see, we can do it no matter what our income is, and we've got the resources to share with you to help you figure out that cash flow and set you up for future financial success.